Welcome to this video today, which is on the 4th of October. It's Monday. We're going to be looking at trend following big trends. When I mean big trends, I mean looking for moves at 300, 500 pips or more. Now, in relation to this, we're going to be looking at three pairs in this video. They all include the euro. They're going to be EURUSD, EURJPY and EURGBP. We'll go and take a look at the charts in just a moment. Now, in terms of catching big trends, what we like to do is do simple fundamental analysis, check out the sentiment towards the pair, then just use simple technical analysis to time our trade. Now, in relation to these euro pairs, they all look really good risk reward trading opportunities in our view. You can make your own mind up when we look at the charts, which we're going to go and do right now. But just before we do so, please do keep in mind, it is my view as of right now. It could of course change in line with the market actions and conditions. If you want to learn our trading strategy, and learn all our techniques, all you need to do is click on the link beneath this video to get live access to our member center. Also, we do analysis of 14 FX pairs each day, including the three we're going to look at right now. Also, beneath this video, you can follow our Facebook page, join our Facebook group of traders, and finally check out our Recommended Regulated ECN broker. Now, we'll go and look at the trade setups, and just going to use the charts on our member center because I'm just about to do my PM update for the day. Right, first trade setup is going to be Euro USD. First chart, Euro USD. Now, in terms of your regular viewer of our videos, you'll know we've been bearish of the euro for a while. Now, in terms of a while, I mean, when we topped out above 122, we took a trade all the way down, then got stopped out just below the 118 level, ran a little bit to the upside into the 119 level, testing these candles here, come off the level, 118.60, and we've come down about 240 pips since then, and we're rallying a bit. Now, this rally will fail in our view. It's just a correction of oversold. I'll go through how to play this trade in just a moment if you wish to do so, but let's have a look at the big fundamentals behind the chart. Now, I want to start first of all with the economies, growth expectations, and here what you have effectively is US GDP here. This is the coronavirus hit. Look at the US economy recover. Look at the hit Eurozone takes, not really recovering at all. US GDP is 3 times the growth rate in Eurozone, and that gap will widen, which is bullish for the USD. Now, the next chart I want to look at is going to be to do with monetary policy. Now, we know that the Federal Reserve in the US are looking to cut back stimulus this year. That is bullish for the USD. The central bank in Eurozone cannot cut stimulus back, just simply because the zone is in such bad shape. It's taking a really big hit at the moment, which I'll come to in a moment. The poor countries of the zone need stimulus to basically stay afloat. And look at the ECB increasing stimulus. They're not going to stop anytime soon. Their stimulus now is equivalent to nearly 80% of Eurozone GDP. Fed just 36.8. Obviously, got negative rates in the zone. Their money printing is not going to stop. That is also bearish for the euro. The other bearish fundamental that's come into play. Sorry, I've gone to the wrong page. Oh, no, I haven't. My apologies. Let me go to here. Make it a little bit bigger. Eurozone is really suffering with the spike in energy costs, much more than the US, the UK, or Japan. This is natural gas and electricity spot price going parabolic. Okay, now in terms of the EU, they just totally messed up their energy policy, particularly natural gas, where they've hardly got any reserves and are heavily reliant on Russia. Mr. Putin will be very happy. Now, in terms of the energy impact on Eurozone, I just want to show you this chart here, which comes from Rabobank. Here are commodity price spikes, okay? Obviously, the big one is energy. These blue lines are recessions. Look at this big spike and then check out these two spikes over here. We're just between the two, aren't we? But look, you had a recession here on that spike. Recession soon followed after this spike as well. You're going to get another blue line, okay? So it's just not looking good for the EU. Now, in terms of another big fundamental, China SOAP. China SOAP impacts on the EU because they do so much trade with China, particularly Germany. And I won't go through the graphs on the China SOAP. You can look them up for yourself. That's another bearish fundamental. So what we have effectively is nice move down. That was just a correction of oversold. This is just a correction of oversold. I think it will fail back to the previous lows. That candle took them out, yeah? So I'm looking to fail back to here, into this level here, 117, big level. That's where our stop is behind. This moment in time, we've taken in some profit down here. We're going to place it back in here. If we don't get up to here, we'll just put it in through 116, okay? Where could we go to? Let's have a look at the monthly chart. Monthly chart, you see the euro come down, just holds the 20-month moving average there, then breaks it. 20-month moving average and that tail low should hold rallies. Where's fair value for the euro in terms of the way we see the fundamentals? I think 110. So another 600 pips on the downside. Now, in terms of the chart, you just saw the member center. That was from earlier this morning. If I look tonight, do I need to make any changes to our view? No, because euro's just not doing much at all, hardly any change from this morning. Okay, now in terms of going to the next pair, I want to go on EURJPY, and we've got a long-term bearish view of the euro here as well. And in terms of the chart, did get a decent short off the 134 level, down, got stopped out here. Then we sold again. We bounced. We didn't get much out of that trade. And then we sold again, got above 130. We came in below the round number. And yeah, it's just a minuscule profit at the moment. But this pair, I think, could have more potential on the downside than USD. Euro USD. You can see my targets, 126, then 120. So basically 300 pips to first target. Second target would be 900 pips. Now the yen is very oversold historically. What I want to do is look at the monthly chart. Come up here. Then we double bottom, go on off to the upside, and then you've seen some weakness on the monthly chart. Last 4 months. Okay, this month has only just begun, a little bit of blue. But here, 130 is a big level for the euro to take out. I don't think it can take it out. I think we'll go down to 126 here, where we broke above the double top. But fair value is probably 120. Yen is very oversold, but what I would keep your eye on is stock markets, because stock markets are looking. This is a monthly chart, the S&P. Let me get a daily chart. Stock market's not looking too strong. Came down, tried to rally back, coming down. If we can get through today's low, that will firm the yen. If you start to see big stock market weakness, the yen becomes the currency that appreciates the most, even more than the US dollar, which gains from stock market weakness. So watch the stock market in relation to the yen. Now, in terms of trading this pair, this level here, we're testing it this morning, and yeah, we think it will hold, and we're looking really for 128 to break. So you could take 128 or a move below 129, which I think has actually occurred tonight. So let's have a look at it. EURJPY. Yeah, we've come back through the 129 level. So you could put a little short in if you're bearish like us, and then look to double up or add through 128, say 127.80, clear the round number, then see if she runs. Okay, a lot of downside potential in our view. Let's go back to the charts, daily charts, and look at the next pair, which is EURJPY. This is a bit of a scrappy chart, but I've got the feeling it could turn into a big trend. And talking about energy impact on economies, this big blue here is all to do with energy problems in the UK, and then you get some follow on. And yeah, I was looking at that and thinking, actually, you know what? Eurozone's got far bigger problems than the UK. Okay, the UK's got problems, but Eurozone problems are worse. That gives us good entry. You can see it, 86.10, just basically through these two bodies here, down. Look at that spike. That's real exhaustion down today, hanging around. That level should hold. You could sell off that level, or just put a short in, little short, then wait for this level to give way to add size. Okay, pound very, very oversold historically. Also, in terms of monetary policy, Bank of England are going to tighten rates quicker than Eurozone. Economy, in our view, is in better shape. Let's have a look at the monthly chart, because I've got a target here of 80. So let's have a look. Sorry, can't type. EURJPY, it's the daily. Let's go. You can see what's happened today. Got red again. After I did my update this morning's monthly chart, you've got the 85 level here, okay? But I would wait maybe for that spike to give way, 84.50. Then, not too interested in these candles here. The big support zone is here at 80. That is fair value in our view. So for patient trend followers, I think this could be a good trade as well. I know the price action pretty scrappy, but yeah, if we look at the fundamentals for Eurozone, they're terrible, and they're not going to get better. They're going to get worse. So for us, all three trade setups look good. And in terms of your trading, yeah, big fundamentals, you do not need to sit around your screen. You just check twice a day like we do. So it's a very time efficient way of trend following. Okay, so yeah, we shall see what happens with these trades. But today, that's the end of the video. Thank you for watching it.